market crashes are widely known for their effect on consumers, a reverse market crash often goes unnoticed. In today's video, we delve into the lesser explored dynamics of the financial world, including the potential for a reverse market crash coming in 2024. So what exactly is a reverse market crash and what causes this to happen? The more commonly known market crash refers to a sudden and rapid decline in the overall value of a financial market. This decline typically occurs over a short period, leading to a significant drop in asset prices. However, reverse market crashes are the opposite. They often happen when the market experiences an abrupt and substantial increase in value. Reverse market crashes often result in an increased wealth gap, where the rich get richer and the poor become relatively poorer. In other words, the sudden surge typically benefits those already invested in the market, leaving others behind. Essentially, a reverse market crash looks like this. The market surges while the economic system collapses. Although rare, a reverse market crash happens for two main reasons: inflation and debt mismanagement. Interested in learning more about what's important to investors, property managers, and tenants? Well, hey there, it's Alyssa from Bay Property Management Group. Just a quick pause in the video as a reminder to hit that subscribe button so you never miss out on the latest videos with new content uploaded weekly. We appreciate your support, and now back to the video. To better understand how a reverse market crash works, it helps to look at instances of hyperinflation. Here are some of the main examples that have occurred in Germany, Zimbabwe, and Argentina. Post-war Germany. After Germany lost the war, they were forced to pay tens of billions in reparations to cover civilian damages. This caused them to print money at an astronomical rate, contributing to hyperinflation. Germany accrued as so much debt that by November 1923, $1 was equal to 1 trillion marks. Unfortunately, this economic disturbance resulted in social unrest, along with the collapse of their currency, and contributed to the rise of extremist political movements. Another example of a reverse market crash happened in Zimbabwe in 2008. Their hyperinflation, peaking at around 79.6 billion% in November 2008, was primarily caused by extreme government money printing. This occurred mainly due to awful economic mismanagement, political exploitation, and careless money printing to finance military operations and food production. During this time, Zimbabwe printed 100 trillion notes. However, each note was worth only 40 cents in the United States. Unfortunately, this hyperinflation led to a collapsed financial system and widespread poverty. By 2008, most basic goods became unaffordable for most people, and the economy experienced significant disturbances. The most recent example of hyperinflation is happening in Argentina. Just a few months ago, Argentina's annual inflation hit 142.7%. However, it's always been bad. In fact, their average inflation since 1980 comes out to around 206%, which means on average their prices triple every year. Argentina's recent hyperinflation crisis is largely due to the excessive currency printing by the central bank in an attempt to finance the country's fiscal deficit. However, economic mismanagement, corruption, and instability have worsened the situation. In fact, the extreme money printing over the past 10 years has resulted in the Argentine peso losing 99% of its value against the US dollar. Inflation continues to be a concern for many consumers here in the United States. Many would agree that the United States has several issues when it comes to financial management. With $34 trillion in debt and inflation higher than it should be, there is certainly reasonable cause for concern. That said, there are a few reasons why a reverse market crash is unlikely in 2024. For instance, both inflation and interest rates have been much higher in the past, and we've managed to recover. It's important to note that the GDP has been fairly consistent over the last 50 years, and the U.S. holds the reserve currency status of the entire world, at least for now. Keeping these stats in mind, it's unlikely that we'll see a reverse market crash where inflation rises significantly and stock markets simultaneously surge. For expert insights on a variety of rental industry topics, check back in for weekly video uploads, and don't forget to hit the notification bell for exclusive updates. Thanks for watching, commenting, and subscribing. We will see you in the next video.